Okay, what is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, I am very excited to do some more stock analysis for Generac, and this stock is just looking more and more attractive. Yes, I know it's possible that this stock can go down further, and maybe we see 160 or even $140 a share some point soon, and that's possible. But I'm willing to take my chances with this because the more I look at these numbers, the more bullish I become. And when I think about not only the data center business and how they're benefiting from all that growth, which that grew, I believe, over 30% year over year in the last quarter, but with the power outages and the amount of people that are buying these Generac generators for residential purposes, it makes me really think they're going to beat on earnings this year, raise their guidance, and I think the P ratio is going to expand. They're going to beat on earnings. They're supposed to do $10 of EPS, GAAP EPS for next year, and $8 this year. I think they're going to be able to beat these numbers. I think it's going to come in at least 8.50 a share this year, and then at over $10 a share for next year. And I have a couple different reasons here. The first thing is this is what is driving down the stock, though. So, the Trump administration issued an executive order increasing scrutiny of foreign sourced grid equipment. While investor concerns are centered on Generac because of these engines for the platform, the firm believes the company is largely outside the scope of the EO, the executive order. And so the firm has a rating of $280 a share. Okay, right now it's 180. So keep that in mind. I'm not for, betting on analyst price targets, but I'm just saying it kind of gives you an idea. Um, okay, so whether or not these Chinese sourced things or whatever, whether or not the foreign sourced grid equipment is going to have an effect or not, I believe it's going to be short term or it's not going to happen or whatever. That's a small thing compared to the rest of this business and what's going on. So what I am betting on here is that in the Midwest over here where I live, this month we had over 800,000 people lose power between Indiana and Illinois. I believe Illinois had over 200 tornadoes this year. The storms were way worse than normal this year, and not everybody, but a lot of people bought generators, and they weren't all Generac. There's cheaper options out there, but Generac is the name brand. They have the most market share, and they are, the higher quality things, the higher quality products that people go to. So I believe this storm that caused all this power outages is going to have an effect on the company's numbers this quarter. Okay, so that's going to raise EPS and earnings for this quarter and for the whole year. But throughout these states, we had, multiple tornadoes, 100 mile per hour winds, over 800,000 homes and businesses lost electricity, and parts of where, by my house, not Gary, but in surrounding towns and stuff over here, the Gary, Portage, a couple of these towns had no power for up to 2 weeks. Okay. So this is a lot of this is a big deal, and this is going to affect the demand for generators, right? Now, I looked at what are the in the United States, what states have the most tornadoes. As you can see, Texas is the biggest state, so that's why they have over 100 a year. But these other states, they normally have about 60 to 80, let's say, right? Well, then we look at and notice Indiana and Illinois are not on the list. Then we look at the last couple of years. This is for Indiana and Illinois. Okay. Indiana, normally it has, anywhere from around 15 to 60. Okay. Which is kind of a wide uh, range, but you get the point. 15 to 60. This year we have 87 so far, right? There could be more. So we already far are outpacing storm count in Indiana. Look at Illinois. It's insane. Illinois normally has between 30 and 140, let's say. This year we're at there's over 200 tornadoes in Illinois. Okay. So the storms were way worse. So much damage was done. I believe that's going to have an effect on the generator demand. Then we look at what's going on during this time. As of June, they are, having these partnerships. They're expanding facilities. They're making these partnerships with more for data centers. Like those numbers are gonna grow over 30%. And then residential actually went down. In the latest earnings, residential was down 2%. I find that hard to believe that's going to happen for this quarter. I find that hard to believe. When a million people and businesses lose power, there's no way that's not going to help their numbers. There's no way. So that's the way I see that. Obviously, data centers, all that expansion stuff is positive for the business. Then like I said, we're looking at 20% revenue growth expected this year. Again, these numbers are not factoring in the storms and any new partnerships, the data center expansion. Like they're going to beat on these numbers. Then to actually get an estimate and run the numbers for the valuation, they are expecting 9 to 10% margin for the full year. Net income margin of 9 to 10% for full year 2026. Um, Again, not factoring in what they've just did. So it's probably going to be at least 10%. And then the revenue guidance for this year is $5 billion dollars and then $6 billion dollars next year. Okay. So what's 10%? The 10% margin on 6 billion of revenue is going to be $600 million dollars. How does $600 million dollars compare to what this company normally does? Well, let's see. The last 12 months, they only did 258 million. Okay. In 2025, they did 360 million. They have not done anywhere near $600 million dollars since what? 2021. Okay. And what did the stock do in 2021? It was at $500 a share. Okay. So what does that tell you? So insane jump in earnings. Both residential and data center commercial operations are going to grow, benefit this. Um, And then, so we take that $600 million dollars of profit, okay? You can also look at it like when they do 6 billion. So let's also look at so what are the margins for this company normally? So 4%, 7%, 5%. So they said 10%, right? Which is really good. That's almost dating back to 2021. So then you look at a price to sales basis, right? If they do $6 billion dollars of sales, that would put the stock at, again, they're probably going to beat on that, but let's just say 11 divided by 6 is a 1.8 price to sales. That's what we're paying right now. 1.8 price to sales, which is all the way down here. So in these last couple years, this is definitely on the lower end. It rarely trades under 1.8 times sales. And that's assuming they don't even beat on numbers. Okay. So we're paying 1.8 times sales. Then you look at the PE, right? They're doing 600 million in profit next year. All right. Well, in really tough times, rare times, this stock will trade at 15 to 20 times earnings. But on a normal basis, this stock normally trades at about 35 times earnings. Okay. 35. And even if we said 30, 30 would be kind of conservative. That would be too conservative. 35 is what's realistic. So what is 35 times 600 million? Well, let's see here. 35 times 600 million is $21 billion dollars. Okay, $21 billion dollars. That's double where the stock is right now. And again, it's almost going to be as good as it was in 2021. So it might not go to 500 a share, but it very well could go to 400 a share. That's kind of what I'm betting on. I don't want to say I for sure see the stock going to 400, but I would say I for sure see it going to 300. I would say 300 should be easy. 400, if everything goes right, 400 is it's realistic. Like the numbers are there for 2027. For this year though, by the end of the year, I wouldn't be surprised if it went to 300 a share. So just you're getting a great valuation on this. Again, 35 times earnings. They're supposed to do 600 million in profit. It's going to be, it's just, that's it. That's all it comes down to. So that is my analysis for Generac. Let me know what you guys think down below, and I will see you in the next video.